Let me also welcome on board Deven Choksey then. Deven, hi, morning. Good to have you on the show. Lots of data points, right, to look out for. I mean, not just that there is expiry, you'll have the auto monthly sales, you'll have the state elections. We'll, of course, be keeping a keen eye on what the dollar as well as the Brent movement is. But you'll have quite a few listings as well from the primary market. What, to your mind, is going to keep the market mind space occupied?
Yeah, Ashok, good morning. Well, I think the market definitely wants newer stocks in the portfolio. Uh, Companies like Tata Technologies, which is basically an engineering R&D business, uh, definitely I think is the first in the list. I think which is getting listed in the next week. And I believe that I think these are the companies which are likely to see the inclusion in the portfolios of some of the large investors, including mutual fund, including insurance companies. Uh, the whole important point here is that I think market definitely wants I think the larger number of sectoral play. Like engineering R&D is one sector where I think you have likes of Tata Elxsi, you have likes of Science Technology, KPIT, LTI, Mindtree. Some of these companies which are having the niche plays in that, I think that also adds into the Tata Technology kind of companies. So the portfolio basket is expanding, and that is what is keeping us busy. I think adding into the portfolio some of the good quality stocks. I believe that I think selectively, fundamentally, some of the good stuff is looking good in at automobile ancillary. They also are likely to be one more area where probably you are going to see the larger amount of inclusion in the portfolio. OEMs like Ashok Leyland, which has fairly lagged behind compared to the peers like Tata Motors, are likely to see the rally up on upswing. So I think the selective stocks in the market are likely to show improvement into the stock price, and I think the appreciation in the portfolio of investors.
Nikunj, you were talking about price hikes as well, and now even cars are set to get expensive. Audi has announced a price hike, and Maruti has not specified how much. Audi has said 2%, so you have to get your Audi before the 1st of Jan.
With Avan, it's only 5 stars and Audis. I didn't start it.
No, it's price
You
hikes.
focused on Maruti, which is more
hikes.
important for me.
Yeah, but Maruti, expected to raise their prices. Let's get in your thoughts then, Deven. Within the entire auto space, what exactly is it that you're looking at, given these price hikes that are likely to start off, because the sector is acknowledging inflation, high raw material prices?
So fortunately, inflation remains to a greater extent under control, and input costs have probably I think remained by and large under control. The normal price hike with the new models in the new year, I think, is a normal tendency of most of the auto majors, and that is what they do. So I'm not completely surprised. However, I think for large volume player like Maruti, which commands highest market share, and with the kind of focus on the value-added SUV portfolios, I believe that I think the Maruti definitely remains as a strong bet. Of course, the stock price has little headroom at this point of time. So one will have to buy when the market gives a correction or a deep correction. Maybe at this point of time, I think the opportunity remains stronger with companies like Ashok Leyland, as I just alluded a while back. I believe that I think the commercial vehicle segment in particular, both for Tata Motors, Ashok Leyland, Eicher, I guess I think is likely to show higher amount of traction going forward on few counts. Infrastructure-led spending is asking for higher amount of volume increase for these companies. At the same time, newer roads getting constructed, newer industries coming up through PLI schemes. I think that is where again I think the demand is increasing. Agri sector performing well through the cooperatives. Again, I think the demand is increasing. So and scrappage policy to name the last one. I guess I think are all put together, suggesting that the commercial vehicle demand is likely to rise and rise very smart. Most of the commercial vehicle stocks haven't done enough, as I see it. They are likely to be outperformers in next 2 years or 3 years portfolio. So probably, I think one could ask for buying some of these companies into the portfolio, given the corrective markets and the stock prices. I think that could be an opportunity to buy into the portfolio.
Deven, it's the new paper. I mean, everything from an IRADA, which is going to list on December 4th, to a Gandhara Oil, Federal Bank financials, Flair Writing, and then, of course, the much anticipated and awaited Tata Technologies. Where is it that you feel we're going to see a dhamakidar listing, if not already?
So I think Tata Technologies we already spoke about, and I believe that there is an appetite for investors to add into the portfolio for the reasons which I talked about. The Gandhar oil also looks, I think, reasonably promising company. The niche area in which they are operating currently, I think that area could possibly give them higher amount of weightage into the portfolio because they are a specialized derivative company as far as I think the crude oil derivative markets and the products are concerned. So from a perspective of looking at adding the stock into the portfolio, this one should remain equally, I think, interesting. And the third one would be, of course, I think IREDA, where I think the larger focus is going to be on the projects which are on the renewable side. Of course, I think these are all infrastructure related NBFC businesses, so they take relatively longer time to shape up. But in my viewpoint, I think it will also demand some systematic inclusion in the portfolio. Fortunately, I think for mutual fund industry, you are having a larger fund flows coming into, and as a result of which, I think they have the appetite to expand a basket of stocks into the portfolio. That's where I believe that some of the newer papers will stand a good chance to get inside or included into the portfolio. We like some of these companies which we talked about as business models are looking promising. Maybe the market gives opportunity during the listing time. It could be a good opportunity to add them into the portfolio.
Deven, where are you booking profits? You know, we always tend to focus on kya lena, what to buy, what more to buy, what to add more. But to buy something, you have to sell something, right? That's how it works. Unless you're sitting on cash. Where are you exiting completely? Where are you locking some gains? Where are you, redeploying capital?
So it's a very interesting point, Nikunj, and I'm glad that I think we are discussing this subject. Uh, well, I think there is no perfect theory as to how to exit the stock, but we believe that I think when the fundamentals of the business remain strong, you don't completely part with your investment. So the strategy that we follow out here is I think we keep 70% of our portfolio intact. I think when we are invested in a good business where we see the long-term prospects right into those businesses. And maybe I think 30% of the portfolio we keep it aside for the spike. I think in the portfolios where we see the profit opportunities. So there are a list of stocks I think where we see the headroom is comparatively limited, and maybe I think those companies where 10 to 15% kind of headroom is available currently. Some of the large cap companies, overowned companies by mutual fund. I think we try and retain. We try and I think keep the maximum investment. I think at the 70% level, and then balance part we try and book profit, shade some amount of weight out of that, and at the same time invest that money into some of the promising newer companies which are coming up into the portfolio. Our understanding is that I think 2024 till first half of 2024, market is likely to remain extremely strong. And if that is the case, then possibly there is no point in exiting the portfolio investment completely, particularly when you're convinced about the business. And that is where I think you book some part of the profit in the rising upside on the upside in the market, and you create a further portfolio into you. As far as I think the profit booking is concerned, and swapping into the better quality stocks which are recently getting into the market as listed markets.
Even is there merit in, let's say, looking at LIC deep value? The stock is consolidated a lot, way below its offer price, and whatever happens now in terms of rate of change for LIC will be positive.
Well, I think there is no reason to go negative as far as I think the business remains. I think the business prospect remains. They are absolutely convincing. The portfolio shift from par to non-par policy, I think that is a very welcome move, which is basically helping the company in adding into the bottom line profits. I think that is also phenomenally, I think, a change move that one can experience. At the same time, a constant, I think, increase into the portfolio of investment that this company has built is suggesting that over a longer period of time, I think you are likely to see the regular income flowing into the balance sheets of the company and for the shareholders. So these are all some of the fundamental strengths of the company which remains very positive, absolutely. And we also believe that they are adapting to the digital platform also equally fast and creating a larger amount of presence in the distribution. The main important point and the challenge out here as far as the stock market journey is concerned is an overhang of the dilution of the equity, because that is something which is already done. And as far as I think the stock price upside is concerned, every time I think the stock is to go up, I think one will look around that if the company will go and dilute the equity new investors. So that is where probably I think this overhang continues. But otherwise, I think the business remains absolutely convincing. Maybe some better communication coming out from LIC on a regular basis to investor could possibly inspire more confidence into the marketplace about this company.
Deven, great to have you on the show. We'll let you go on that note.